So the Fed has finally overreacted and might have just caused the start of the next recession. Now the markets have been selling off like crazy. The S&P is down by 2%, the Nasdaq has dropped by more than 5%, and it seems that every major index is experiencing a big sell-off. Now many of us thought that Jerome Powell would never have the guts to go through with his taper plan, but he has finally pulled the trigger. Now gold and silver has been smashed down in price, and many precious metals investors are wondering, is this a good time to grab some bargains, right? And in this video, I will go through specifically how the Fed's minutes announcement is impacting gold and silver, what we should keep an eye out in the near term, and more importantly, is this a good time to get into precious metals? And in this channel, we cover everything gold and silver. So if you want to learn more about investing into precious metals, be sure to subscribe to the channel. Let's dive in. So gold has taken a nosedive from 1830 down to 1780, which is almost a 3% decline, while silver dropped around 5% down to $22. Now, this is a big move that happened within just a few days. And what caused this reaction is the Fed deciding to stop buying bonds and finish the taper by March of this year, 2022. Now, ever since the middle of 2020, the Fed has been buying treasuries to inflate the economy, and that means they are going to stop pumping $120 billion every month into the economy within the next 3 months. And in a double whammy, they have announced they will likely begin to raise interest rates by March instead of the previous target of June. And because of this, right, gold and silver, they are caught in a difficult position because these are two things that will make interest rates rise. Now, if we look at the yields for the 10-year bond, we can see a big spike up over the last few days, showing that the market is already anticipating the Fed to stop buying the bonds. Now, the Fed essentially has two main tools to influence the economy, right? The first is setting interest rates, and the second is open market operations, which is essentially buying and selling bonds. And they are using both. They are using both to try to control the crazy inflation rate of over 6% today. Now, the first move they are doing is they are stopping their bond purchase, which means the money supply won't increase like in the past. And the second chess piece move that they are doing is that they are raising the rates that other banks can borrow from the Fed. And this will really trickle down and raise every other interest rate, such as business and mortgage loans. It will get more expensive for you to take a home loan to buy a new house going forward. Now, if the Fed decides to make this a triple threat by selling off their bonds, they will effectively decrease the money supply by taking out cash from the economy. And all of these three actions will increase the interest rate. And a rising interest rate is bearish for gold and silver. Now, I want to talk a little bit about how gold and silver is affected by this. Now, because gold and silver are monetary metals and are stores of value, they are very sensitive to real interest rates. And because they pay no dividend whenever interest rates rise, investors tend to exit precious metals to find better yield elsewhere. Now, if we look through recent history, we can see two incidents where every time the Fed either raised interest rates or announced one, it caused the price of gold to fall either because of a recession or a shock in the market. Now, when the Fed last started to raise interest rates back in 2016 after almost a decade of near zero rates, during that same time period, gold started to fall from around $1,350 down to $1,150 within the next 6 months. And that's a decrease of around 13%. And in May 2013, the Fed at that point of time announced a taper that just shocked everyone, right? This caused gold to fall from around $1,430 down to $1,230, losing around 14% of its value. Now, if we were to follow history, and that means that gold and silver might still have some room to fall from where we are today. Now, this is not certain, this is not 100% written in stone, and anything might happen, guys. But if history does repeat itself, there is a chance of gold falling another $100 or $150 or so. And that means it is entirely within the realm of possibility for gold to reach $1,600. And if gold does take a tumble, silver will likely fall harder because it is a smaller market and an industrial metal as well. And if the Fed does reach the end goal with their taper, the economy might very well reach a point of recession, and that means that industrial demand for silver might drop, causing the price to fall even further. So what is the fate of gold and silver in the short term? Now, all this crystal ball guessing is based on if Jerome Powell really does go all the way with his plan to taper and raise the interest rates. But there is a chance that he will flinch, right? There is a good chance that he might falter if the market really shows signs of a big collapse, right? Now, either way, the Fed is really caught between a rock and a hard place. It's either they go all the way and potentially trigger what might be the biggest bubble bursting in history, or he reinflates the bubble by buying bonds again or not raising interest rates, and that just kicks the can down the road, right? And that is why when it comes to investing in gold and silver, there's no clear path ahead in the short term. It can be equally a good time or a very bad time to buy, and it all depends on if the Fed decides to chicken out, right? And with Powell suddenly coming out of nowhere with his announcement, anything is really possible today. Now, while the short-term outlook for gold and silver might be bleak, I really don't believe the long-term outlook has changed very much. Now, remember the Fed has more than doubled their balance sheet from 4 trillion to over 8.5 trillion in just 2 years. Now, never has this ever happened in history before, and gold supply increases only around 2% every single year. There is a lot of money sloshing around the financial system, even if the Fed doesn't pump any more money in today. Now, the favorite weapon of choice of the Fed since 2008, every time a crisis hits, is to helicopter drop money back into the economy. It's really becoming a tradition now. And if we look at real interest rates, things are still bad. If we take the nominal interest rates we can get from a bank account, which is around 1% max, and I'm being very generous here, and we minus off the inflation rate of around 6%, the real interest rate is still around minus 5%. That means we are losing 5% of our purchasing power every single year. Now, this is where, as investors, we have the biggest headaches of our lives. Should we stay in cash and slowly bleed our purchasing power, hoping for the economy to crash where we can get in and start to buy assets at a discount? Or should we continue to invest in the markets and risk the bubble popping, right? Now, I don't really think anyone really has a clear answer and can really tell you the definitive right way to go. But I can say is that every time gold and silver suffers before a crisis, they have recovered strongly, and history has showed us. And gold and silver has reached all-time highs after the 2008 crisis and the 2020 crash. Now, I personally love to buy gold and silver when everything seems bearish and news outlets are predicting the end of the world. And if you're looking to get into metals during this period, I must warn you to be very, very careful, right? So how do you continue to invest and stack gold and silver during this difficult period? Now, when I buy my metals, I personally dollar cost average my purchases, right? I buy a little every month or quarter, and I have never lump sum invested into anything. Doesn't matter whether it's stocks or gold and silver. I believe the riskiest things you can do today is to back up the truck and start blindly buying the metals, right? It could continue dropping for the next few months to come. However, if you're looking for buying opportunities to add to your stack, or if you're new to gold and silver, this might be a good time for you to average into the metals, right? Now, slowly accumulating metals, and I mean slowly. The situation is really uncertain, and the Fed's decision is really too erratic to be taking big risks today. Now, here's the big question. Can gold and silver really resist the revenge of the Fed? Now, what I am really interested to see is if gold and silver can resist the coming crash if power really goes through with his taper. Right now, we can see many other asset classes like stocks and especially Bitcoin getting smashed into the ground. It will really show us how people are starting to view hard assets and real money if gold and silver can really hold strong and not fall much in price. I believe this can only help strengthen the long-term potential of precious metals to come. So there you have it, guys. I believe that the next few months to a year will be very volatile for precious metals. It could drop and rise to only drop even further. So if you're thinking of getting more gold and silver, it's important to not rush in and commit everything in one shot. So let me know what you think will happen to precious metals this year. Do you expect them to hold strong or follow the economy into a crash? Let me know in the comments below, and if you enjoyed today's video, be sure to smash that like button and subscribe for more gold and silver videos. Thank you guys so much for watching, and I'll see you soon.